non-convertible bonds. I, Ajay Maglunia, representing JM Financials, welcome the esteemed speakers from PFC, Ms. Pamela Chopra, Director, Finance, and currently holding additional charge of Chairman and Managing Director of the company. Mr. Sandeep Kumar with us, Executive Director Finance, and Mr. Sanjay Malhotra, Executive Director Finance, sitting with us today. Just a brief about Mrs. Chopra. Mrs. Pamela Chopra has been associated with PFC since 2005 and has been serving as the Director Finance and CFO since 2020, as well as a member of the Board of the Directors. He is a qualified cost accountant and MBA and has over 35 years of experience in power sector, including the NHPC and Power Grid Corporation, PGCIL. In her new role at CMD, Ms. Pamela Chopra will be responsible for driving the strategic initiatives at PFC, spearheading the organization's growth trajectory, and further strengthening the position as leading Maharatna PSU. Her extensive experience in project financing and infrastructure development, fund mobilization from domestic as well as international market, banking and treasury, asset liability management, stressed assets resolution coupled with visionary leadership is expected to propel PFC to a new height of success. Also, Ms. Pamela Chopra, as the CMD of PFC, sets a new precedent for women professionals in the nation and serves as a source of inspiration for many emerging leaders. Mr. Sandeep Kumar has been with PFC for more than 32 years. During his journey of PFC, he has handled almost all the financial functions areas, including fund mobilization. Mr. Sanjay Malhotra joined PFC in 2007 and is currently heading PFC Fund Management Unit, Lending, Concurrence, Restructured Asset Unit, and Resource Mobilization, Public Issue, and 54 EC. As you all would know, PFC is one of the India's leading public financial institutions and is scheduled a Maharatna Central Public Sector Enterprise. Focused on power sector, PFC plays a strategic role in the initiatives of the Government of India for the development of the power sector in India, and also work with government agencies, state governments, power sector utilities, and private sector clients for the development and implementation of policies and for structural and procedural reforms in the power sector in India. PFC public issue of secured renewable non-convertible bonds, which is opening tomorrow, that is 21st of July 2023 on Friday, and it's scheduled to close on 28th of July 2023, then to Friday next week. Issuer has the option to early close the issue any time in the period once it gets the expected subscription, subject to minimum issue period of 3 working days by publishing 1-day notice. Allotment be on the first come and first served basis. Issue is rated AAA stable by 3 rating agencies called CRISIL, ICRA, and CARE. It offers a simple structure with 3 tenors, 3-year, 10-year, and 15 years, with annual interest payment options in all the series. The NCDs offer attractive coupons, with coupons in the range of 7.45 to 7.55% across 3 series. Category 1 and 2, which are kind of have a reservation of 10% each, are getting a coupon of 7.45 for 3 years, 7.47 for 10 years, 7.50 for 15 years. In the case of category 3, which is meant for individual investors, the coupon is 7.50 for 3 years, 7.53% for 10 years, and 7.55% for 15 years. Point to notice that the focus is really on the individual investors to get this attractive opportunity, which usually is very, very difficult for such a high rated company to be available for individual or retail investors to invest. They have got a reservation of 40% each. So 80% of the issue is reserved for retail and individual investors. I earnestly appeal to all our partners and investors to reach out to maximum number of investors in all categories and let them have this opportunity to invest in such an attractive offering. We have allocated, as I said, 40% for retail, 40% for HNIs, and 10% each for non-institutional and institutional investors. Clearly making sure that individual investors have a preference in the issue. The issue is also providing options to retail investors bidding up to 5 lakh rupees to apply online via UPI. I thank you for taking time to attend this webinar today. We shall run a small video presentation giving us more detailed brief about PFC.
Power Finance Corporation is launching secured debentures at an interest rate of up to 7.55% per annum. PFC's non-convertible debentures come with highest degree of safety with AAA stable ratings from CARE, CRISIL and ICRA. PFC's debentures are tradable, taxable, secured and listed. Minimum application size 10,000 rupees and thereafter multiple of rupees 1,000. Tranche 1. Issue opens on 21st July 2023. Issue closes on 28th July 2023 with an option for early closure or extension. For risk factors and other details, refer to the shelf and Tranche 1 prospectus, each dated 17th July 2023. Available on the websites of SEBI, BSE Limited, the company and the lead managers. PFC. Funding for a brighter tomorrow. Power Finance Corporation is launching secured debentures at an interest rate of up to 7.55% per annum. PFC's non-convertible debentures come with highest degree of safety with AAA stable ratings from CARE, CRISIL and ICRA. PFC's debentures are tradable, taxable, secured and listed. Minimum application size 10,000 rupees and thereafter multiple of rupees 1,000.
Thank you, Engineer. May I now request Mrs. Pranati Chopra to share her vision of PFC with us?
Good morning, everyone. As Mr. Ajay has already briefed, that this webinar is with relation to the public issue of taxable bonds launched by PFC. Mr. Ajay has already briefed about the structure of the bonds. Let me give you a brief background of PFC. PFC is a non-banking financial institution set up on 16th July 1986. They have been registered with RBI as an NBFC in 1998. From there, the journey of PFC has gone ahead with in 2007 coming out with the IPO of the company and also being awarded the Navratna status by the Government of India. Going forward from there, in 2019, we have acquired REC's Government of India stake in REC. That is 52.6% stake in REC is now held by Power Finance Corporation, and REC is henceforth the subsidiary of Power Finance Corporation. In 2021, the Government of India has awarded us the Maharatna status, which is the highest status for any public sector undertaking. We have been into the financing of power sector, backward and forward linkages and its allied activities since beginning. In 2022, the government has allowed us to expand our horizons, and we have also been allowed to fund infrastructure sector. If I talk about the financials of Power Finance Corporation, as on 31st March 2023, we had a loan book of 4.22 lakh crore on standalone basis. As I told you that PFC is responsible for financing of the Indian power sector primarily. Over the years, for funding activities, we are majorly relying on the borrowing from large financial institutions to fulfill our role. In 2021, we have taken a significant step by issuing our maiden public issue of taxable bonds. The idea behind this was simple but powerful, that we want to associate each and every individual of the country for growth story of the power sector, and in turn the Indian growth of the Indian economy. The response received was beyond our expectation. The bond issue was oversubscribed nearly 9 times, reflecting the enthusiasm and the trust of the investors in PFC. We raised close to 4,400 crore. That too, everybody knows that were the COVID times. Seeing the huge success of the issue in 2021 and the trust of the investors, we strongly believe that every Indian citizen should have the opportunity to participate in our nation's energy transition journey. Today, climate change is concern of everyone, be it in India or in the international market. It has started impacting each one of us. All the countries in the world are working towards mitigating this challenge. I am proud to share that India is at forefront in this. Our Honorable Prime Minister has outlined the commitment of India towards climate change in his Panchamrit statement, where India has pledged to have 500 gigawatt of the non-fossil fuel energy capacity by 2030, and also aims at net zero by 2070. The target in front of us are huge, and PFC, along with Government of India, has already started working on this. If we talk of the transition to renewable energy alone, estimated funding of rupees 31 lakh crore is required by 2030. And if we talk about achieving the net zero by 2070, an investment ranging from $10 trillion to 20 trillion is estimated, of which 80% alone is required in the power sector. This investment is just for energy transition. India is a growing country and with the largest population. Today, per capita consumption of electricity is just 1/3 of the world average. So there is a lot of potential which is untapped as of now. To meet such huge demand going forward, additional generation capacity along with expansion in transmission and distribution network would be required. This shows the type of investment required for the power sector. PFC recognizes the scale of investment required for energy transition for the power sector. This is where PFC plays a crucial role. PFC has been on the forefront of providing financial support and guidance for the power sector. Our commitment to a greener, healthier power sector is evident from our impressive numbers. We have financed almost 50% of the total installed capacity in India. As I told you, we have a massive number of 4.22 lakh crore as the loan assets. In 2023, 31st March, we have achieved a profit of 11,600 crores. Our net worth is 68,000 crore and capital levels are at healthy levels of 24.37. We have built a robust foundation that gives confidence to the investors to drive the growth for the Indian power sector. Today also, we remain committed to the Honorable Prime Minister vision for a greener and a healthier power sector. To fulfill our vision, we seek support from the Indian investors. We want public at large and the retail investors to be part of the power sector and India's energy transition journey. Our aim is to channelize the funds to build a stronger, more resilient, and a greener power sector. I look forward for participation from all our investors to make India's bond issue, to make PFC's bond issue a great success. I firmly believe that through this public partnership, we can pave the way for 24/7 affordable and reliable power to each and every citizen of the country. Thank you very much for joining us today. And if you have any questions, we are happy to take.
Thanks a lot, ma'am. It's so nice that you think about retail individual investors and taking all that time to kind of do all that exercise or planning issue for retail, keeping fairly in mind, and I'm sure people will definitely take advantage of it. We have some questions and we can probably have a look at it. I would request audience to type in questions if they have. We will kind of be happy to answer that. The first question is about are NRI investors eligible to invest for this issue?
I think you will be in a better position to answer.
Normally, in the public issues, getting NRI is eligible investor, it takes a lot of efforts and approvals, and given the fact that it is a different monitoring and other approvals required. So it was not possible to get the NRI eligible to invest in this particular issue. But I would like to clarify here that people, after the bonds are listed and traded in the secondary market, NROs from the non-repayable accounts can always acquire and still invested in the bond issue. But in the primary market, NRI as a class of investors are not allowed to participate in that. The second question is about debenture is having any fixed or later conversion into the shares.
These are the non-convertible debentures, so there is no option of conversion to the shares at any point of time.
So this is a simple non-convertible debentures. Unlike perpetuals where there is a case of some eventuality, the option to convert into the equity is available. So the tenor over here is 10 years and 15 years, but these are simply non-convertible debentures. So option of converting into the shares just doesn't exist. Do you think we can take advantage of price appreciation in the future when central bank drops interest rates?
These bonds are tradable bonds and in the demat. So wherever, if you can see that any price appreciation is there, if you want, you can take, the investor can take the advantage, but it is redeemable at par at the time of maturity.
So precisely as we are close to the end of rate hiking cycle after continuous 10-12 interest rate hikes across the world, I think it's a fair assessment that going forward, we are being at the peak of the rate cycle. There's no point in giving any kind of a future advice about the rate dropping or kind of any price appreciation. But 7.55 is an extremely attractive interest rate. I will urge investors to stay invested because If you sell it down and put your profits, probably you may not get any other opportunities to reinvest at such a interest rates environment. So it's an individual call, one can plan. What is net worth on a consolidated basis and general?
As I shared with you on standalone basis, the net worth of PFC is 68,000 crore, and on a consolidated basis, it is around 1.2 lakh crore.
Why your company is rated Baa3 by Moody's and BBB by Fitch? This is about the international rating.
Yeah. Being a Government of India company, our rating is pegged at the sovereign rating, and in line with the sovereign rating, the rating of Baa3 by Moody's and BBB by Fitch is available to PFC.
What's your outstanding borrowings? Can you please brief on your standalone liability?
The outstanding borrowing as on 31st March 2023 is approximately 3.6 lakh crore. And if you talk of the liability mix, we have approximately 60% from the bonds, institutional investors. We have 20% borrowing approximately from the foreign currency lenders, and around 20% loan from banks and financial institution in our country. This is the broad bifurcation.
So well diversified borrowing mix, you can say that more of market borrowing, which is buying in the market.
Yeah, we have been borrowing from domestic as well as international market. From domestic market, primarily our sources include issuance of bond in the private placement, term loan from banks and financial institutions. There are few short-term loans also. We draw in the form of CP or loans from the banks. We have also been authorized to issue 54EC capital gain bond, even though right now our proportion of the same in the overall borrowing is very low. From the international market, we borrow through bonds as well as the syndicated loans.
Next question, please. What's the profit after tax in this year?
In FY23, PFC has registered the highest ever profit of 11,600 crore.
So that's probably the highest profit after tax in the recent times.
It was highest ever profit for PFC.
Maybe the PFC is growing well and being able to contain its NPA and all of that. So
we have registered a 16% growth in the profit when we compare it with FY22.
Anyway, you have that. Okay. What's the NPA ratio? Yes.
As on 31st March, net NPA for PFC is, I think, 1.07%, which is the best among the industry.
Okay. What's the sanction amount in financial year 23, which is last year? And what's the disbursement amount so far?
Sanction, if we talk of the year 2023, it was around 2,50,000 crores. And during financial year FY23, the total sanctions were around 85,000. Oh, sorry, disbursement was 85,000 crore and the sanction was 2,50,000 crore during FY23.
And obviously take some time for sanction amount to.
Yes. PFC is into funding of the power sector and other infrastructure sector loans. So that takes time from sanction to actually come back down to disbursement level, because a lot of conditions have to be complied with. The projects have to have the basic minimum level of approvals from all authorities, and the work should have been started, only then our disbursement starts. So there is always a lag between the sanction and the disbursement.
Any more questions? First, the allocation ratio for investors in the issue can be discussed. 10% is reserved for institutional investors, 10% is reserved for corporate category of the investors, and 40% each is reserved for investors in the individual category, which is HNIs and retail. So if you talk about a 5,000 crore issue, 500 crore is maximum reserved for QIVs, 500 crore is reserved for the corporate categories of the investors, which is not QIV. And out of the balance, 2,000 crore each is reserved for HNIs and retail. Which is the highest. Clearly indicating the priority for the retail. What's the amount through private sector borrowing?
As on 30th, private sector borrowing. See, we don't have that much of data, but if we see that bonds under private placement keeps on changing the hands. So under the primary issuances, if you talk, so that includes participation from LIC, EPFO, large banks, other superannuation funds, insurance companies. So all these are the categories which are being invested in the PFC's bonds. Apart from this, we have been borrowing from private sector as well as nationalized banks through term loans. And for the again, for the foreign currency, the mix is different type of investors, including superannuation funds, banks, traders, all are there.
What are the future plans for business expansion?
If we talk of the immediate future plans or the medium-term future plans, as I shared with you that there is whatever planning has been done to achieve double the capacity and achieve the renewable energy targets, 31 lakh crore is expected funding requirement till 2030. So PFC is expected to actively participate in the future requirement of power sector.
And would you like to talk about plans for the
See, till the time approvals are not there, I think let us not.
Any more questions? Why interest rate is low 25-30 basis points compared to other AAA papers?
I don't think that any of the government-owned AAA companies have come to the market for any public issue. So the comparison, I think, is not fair in this room.
Any more questions? Whether exit before the tenure is possible in any way? Are the coupon rates and the yield are the same? So again, talk about this. The exit before the tenure is possible by way of actively kind of trading these bonds in the secondary market. The bonds are likely to get listed on the exchange, and these are likely to be traded liquidly. So anyone who wants to kind of exit, they can sell like normal trading in the securities in the market. The company doesn't have any option to kind of repay or buy these bonds at any point of time. Investors have the option to sell to the market. The coupon rates and the yields are more or less same since it's an annual frequency. The interests are payable at an annual rest. So here the yield and the coupon are more or less same. It is a fully secured NCD. If PFC is privatized later, what would be the security of NCD?
Yes, these are the secured bonds. The security has been created by way of charge on the receivables of PFC. And whether PFC is a government-owned company or privatized, I think security is going to remain the same.
Questions are complete, sir.
So, Engineer, you have that AV film, which is talking more about the PFC and its.
Sure.
Power shortages, inadequate infrastructure, and adequate funds were critical challenges until the mid-80s in India. These challenges highlighted the need for reforms and restructuring in the power sector to improve the infrastructure, capacity, and access to quality power. This is when the Power Finance Corporation, PFC, was born. Since its inception on 16th July 1986, PFC has been primarily and profitably engaged in supporting various power projects like thermal, hydro, transmission and distribution projects. And today, we are proud to be known as the backbone of the Indian power sector. We are Power Finance Corporation Limited, PFC, the first Maharatna company in financial space. PFC today is also the largest non-banking financial company focusing on the development, financing and sustainability of the power sector in India. PFC's financing enables the construction and operation of power plants, transmission and distribution infrastructure, contributing to the overall development of the power sector. With a new line approach of Nai Soch, Nai Rahein, PFC has now expanded its portfolio to include refineries, ports, waste to energy, nuclear energy, e-mobility, biofuel and metro rail projects. These recent initiatives add significant momentum to the country's overall economic and social development. Today, PFC is the largest lender to the renewable energy sector, actively supporting and financing renewable energy projects. By facilitating their implementation, PFC is playing an active role in the country's clean energy goals. PFC is leading the financing of energy transition in India and intends to become the focal agency for net zero to steer the nation's commitment to climate change. PFC is also working in line with Panchamrit elements to meet the climate change targets. PFC's expertise and experience in project financing also make it an essential partner in policy formulation, implementation and monitoring. Innovative pilot projects like RDSS, implemented by PFC as a nodal agency, reflect its commitment to evolving technology. International awards and accolades backed by PFC silently speak about its successful journey to date. Besides its core financing mandate, PFC also plays a significant role in societal development through various CSR initiatives like promoting health, education, skill development training, sanitation, provision of drinking water and supporting the differently able, etc. The power sector is continuously evolving and constantly responding to the changing times through various innovations. These innovations are driven by technological advancements, changing energy requirements, environmental concerns and policy developments. On its part, PFC is all geared up to cater to the ever-emerging needs of the sector. PFC is proud to be a part of this exciting transformation process and will continue to play its part in the transition to clean energy to reduce greenhouse gas emissions, improve grid reliability and meet the ever-growing demands of consumers and industry. PFC will continue to accelerate its pace to keep the country shining and help make India a $5 trillion economy by 2025. Power Finance Corporation is launching secured debentures at an interest rate of up to 7.55% per annum. PFC's non-convertible debentures come with highest degree of safety with AAA stable ratings from CARE, CRISIL and ICRA. PFC's debentures are tradable, taxable, secured and listed. Minimum application size 10,000 rupees and thereafter multiple of rupees 1,000. Tranche 1. Issue opens on 21st July 2023. Issue closes on 28th July 2023 with an option for early closure or extension. For risk factors and other details, refer to the shelf and Tranche 1 prospectus, each dated 17th July 2023. Available on the websites of SEBI, BSE Limited, the company and the lead managers. PFC. Funding for a brighter tomorrow. PFC's debentures are tradable, taxable, secured and listed. Minimum application size 10,000 rupees and thereafter multiple of rupees 1,000. Tranche 1. Issue opens on 21st July 2023. Issue closes on 28th July 2023 with an option for early closure or extension. For risk factors and other details, refer to the shelf and Tranche 1 prospectus, each dated 17th July 2023. Available on the websites of SEBI, BSE Limited, the company and the lead managers. PFC. Funding for a brighter tomorrow.
Thank you, Anthony. I think we have concluded most of the questions, and in case anybody has anything further, we are always available. I would like to thank everyone for attending this webinar early in the morning, and thanks PFC Debentures to be there with us, take time out to stay and explain to the investors along with us today. Let me take a few minutes to conclude the webinar by highlighting the key aspects of the issue. I would like to reiterate the issue terms wherein the base issue size is 500 crore with a green issue of 4,500 crores, aggregating to a total issue size of 5,000 crore. As rightly mentioned that in 2 years back in 2021, PFC successfully raised around 4,400 crore in the main issue. The issue offers a simple structure in 3 tenors, 3 years and 15 years with annual interest payment options. In all the 3 series, the NCD offers attractive coupon rate starting from 7.45 to a high 7.55% across 3 series. Of the total issue amount, 80% is allocated to the individual investors and 20% is reserved for non-individual investors. We wish PFC all the success in the forthcoming public issue of NCD, which is open tomorrow. On behalf of PFC and the lead managers, I would like to express our gratitude for your participation and interest in the public issue of NCDs and request for your gracious support to make this issue a grand success. Thanks a lot.
Thank you very much.
Thank you.